Monday, February 5th, 4:55 p.m. New York time. U.S. stock market is closed now, and the futures will close in another 15 minutes. Since we just completed the first day trading for the week, it's important to know what the trend is, to know what the current situation is in the markets. One good way of doing that is understanding what the tone is set at, the pitch, the direction. So I like to look at the weekly charts on Monday, the broad markets, to identify if we took out the high or low of the prior week, or are we still inside the range of the prior week? If we're still inside the range of the prior week, the current candle on the far right will be yellow, simply means didn't take out the high or low the prior week. On the left is a watch list. See on the top left, all that red? Those are the stock indexes that closed today. They closed red. The major indexes closed red. And the yellow highlighted ones means they didn't close above or below. Well, it means they made an inside candle for the day. Down here in the middle watch list, that's the 11 sectors. The 11 sectors, the broad sectors. Look at that. Most of them closed red. And 2 closed green. So on a down market, when the index is closed red, but you have 2 sectors closed green, those are winners. They outperform the overall market. Those should be considered to look at more further for long-term investment. And then down here, we have the Magnificent 7 Plus. These are the tech companies that are most discussed and invested by the big institutions. Have them in big order. Yeah. So there's a mix. Which ones closed green or red? Look at Apple, closed green for the day. Google closed green for the day, and NVIDIA closed green for the day. A lot of red. Well, looking here, when the market closes at 4 p.m., the futures indexes are still open for another hour, which close at 5 p.m. Look at the futures here. They're red as well, too. Again, just one trading day in the week. By looking at those watch lists, we don't know if we took out the high or low. So charts are just as important, or maybe more important, but most media outlets and many others don't include this. So we're looking here at the major stock indexes. There's many stock indexes. Look at the major ones. S&P 500. We're looking at a 5-year chart, each candle's for the week. And for the week, it's a yellow candle. Again, just one trading day. So we haven't taken out the high or low yet of last week. Remember, last week made an all-time high on this stock index, the S&P 500. The NASDAQ 100 also is an inside candle for the week. And also last week made an all-time new high. The Dow Jones also inside candle. Last week was an all-time high. It's that yellow candle. The Dow Transports, also inside candle. Dow Utilities actually closed red, made a lower high, lower low. Already broke below the low of last week. Yeah, more bearish. The Dow Utilities. And the Russell 2000, red, also closed or broke below the low of last week. Close won't be till the close of Friday, but again, broke below the low of last week. So now you're much more situational awareness. The top 3 major indexes, S&P 500, NASDAQ 100, and Dow Jones, have not taken out the high or low of last week. Just by looking here on the indexes, that doesn't tell you that. Just by reading it in a news publication or hearing it from news source, radio, TV, the major ones, that doesn't tell you enough what they're telling you. So I just showed you what you now, situational awareness, much more than many others. Much more, you're in more insight. Correlation of the stock market, also yields, another name for interest rates. Yields also trade in the futures market. When yields go lower, interest rates will go lower. There's different durations of yields from the U.S. Treasury Department. Again, we're looking at a 5-year chart, Each candle's a week. This is the 30-year yield. Already broke below the low of last week. Look at that. Nice. Lower low. Big move already for this week. Lower low. Yields going lower. Soon we might see interest rates go lower. The 10-year yield, same thing, red. Broke below the low of last week and made a new low for the year. Again, this is the 30-year. We haven't taken out the low of last year. But today, on Monday, we already took out the low for the 10-year. New low for the year. Nice. Big difference what's going on between the 30 and the 10. The 5-year, we also took out the low of the year. Go on to the next. The 2-year. Nope, the 2-year did not take out the low of the year, but it did break below the low of last week. So big difference what's going on here from the short-term to the long-term yields. Let's just say many people do the 30-year for mortgages, and then other financial institution products, they're doing the shorter ones. And interesting that 2 of them, the 10-year and the 5-year, took out the lows, made new lows for the year. But they all have one in common. They all took out the lows of last week. That's good. Very nice. Well, typically, you have the effect when you have lower yields, one would expect the currency market to go lower. Well, the US dollar is also one of the safe haven currencies. People want to be parking their currencies in one safe currency. That's typically the US dollar. So look what happened to the US dollar. We took out the high of last week. Yep. Took out the high. So even though the yields may be going lower, new lows of the year, the dollar has been trending up strong from the beginning of the year. Look at that. We took out the high of last week. Dollar's up strong. In the US dollar index, there's several major currencies. Let's go look at those. The largest currency is the euro. So in the weekly candle, again, we're looking at a 5-year chart. Each candle a week. The euro made a new low for the year against the dollar. Strong dollar. You get a lot for return on your investment overseas. Same for your vacation. Japanese yen. New low for the year. The British pound, new low for the year. Yep, the dollar is strong against the euro, the yen, and the pound. Australian dollar, new low for the year. Canadian dollar, new low for the year. Swiss franc. Oh, did we take out that one? I need to update these. 15.25. Oh, so this one still looks like it's lower. Let's, just in case, let me fix this. Let's go see this one's the lower. 15.225. And here we are. Yep, so we did make a new low for the year. This is even lower. Okay, that was the Swiss franc, even lower. Mexican peso, Mexican peso. It didn't take out the higher low yet. So that's one currency that's holding up on its own. Interesting. And US, China, yep, we broke above higher. So that's good for the US dollar here. Yep, the China won, the US dollar. Broke above the high of last week. And Bitcoin, inside the range of last week. Big difference, the performance again here. But overall, yep, we see it, the dollar is stronger. Let's go look at commodities. Commodities are priced in US dollars. Start with energy. What's the tone of the week? What's going on here? Typically when dollar goes higher, commodities go lower, and we have crude oil broke below the low of last week. Nice. Natural gas. Well, it's still inside the range of last week. Going to another commodity. Metals. Gold. Gold also broke below the low of last week already. Same with silver, broke below the low. Well, we have here platinum. It broke below the low of last week, but it's back inside the prior body, so it's green. And copper, red, broke below the low. So the metals are bearish too. Look at that, they're declining. Again, a lot of that has to do with strong dollar. There's another category that's in the futures, commodities, grain products, food staples. Remember, a lot of these food staples, grains, livestock, also have embedded costs, the cost of energy for transportation and other usage. So crude oil being lower, dollar being stronger, helps the commodities being, the agricultural commodities being lower. We're looking at corn. We haven't taken out the high low yet of last week. No. Looking at rough rice, still inside the range of last week. Wheat, still inside the range of last week. Soybean oil. Yep. Looks like it's broke below. Yep, it broke below the low of last week, but back inside there. And I noticed that too. Yep. Last week we took out making a new low for the year, testing that low of 2023. So I need to update these. Soybean meal, inside candle for the week. And soybean futures took the low out last week. Interesting what's going on with the agricultures here. Yep, they're declining. Good. So your food costs should be lower days ahead. And now let's livestock. Live cattle, no surprise, took out the high of last week. Feeder cattle, inside range from last week. Lean hog, actually took out the low of last week. That's the situation. Again, the tone of the week, the direction of the week. Higher probability. And the breakout is what you should be looking for. Identifying that for the intraday, if you're day trading, or swing trading for the week. This higher time frame is very important. Thank you, as always, for spending just a little bit of your time with me. That's it for the video. Thanks for watching.